Optimistic, but cautious. That's our topic for today's Backstage Pass. Well, hey there, everyone. I just want to let all the folks that are down in South Florida, our friends and family and colleagues, we just want to let you know that our thoughts and prayers are with you as Hurricane Ian is moving on shore right now. Thinking about you guys. Hope that everybody was able to get out ahead of the storm, and if you did stay, you're hunkered down and everybody is safe. Thoughts and prayers are with you guys. Today, stocks are up pretty significantly. Mortgage bonds are up as well. Mortgage rates opened up lower today, and that's nice. And we've actually seen some repricing for the lower. We'll talk more about that in just a minute. But first, let's talk about news for the day. So pending home sales, this measures signed contracts on existing homes. Data for the month of August came out and showed that pending home sales was down about 2%. And that was in line with what was expected. And remember, it was kind of a counterpoint to what we talked about yesterday with new home sales for August. New home sales were up in August. Pending home sales are down in August. And really the reason why is because folks that own their home right now, that's existing homes, well, they're reluctant to sell right now because they know they're going to have to go out and purchase a house and have a higher interest rate. So folks with that own their home right now, they're a little bit more reluctant to sell right now. So existing home inventory is lower than what it normally would be right now. But we do expect that to change. We're optimistic especially for the fourth quarter. We expect that to change, especially as inflation starts to come down. We're really looking for October. Whenever we get the September reading for inflation, we're looking for in October, that data will come in October. We're looking for that inflation reading year over year to start coming back down, and mortgage rates are going to follow. As mortgage rates start to come back down, we expect to see a little bit of a pickup in activity on the existing homes sales side of things. So we're optimistic about that, and we're optimistic about quarter four. Now, Mortgage Bankers Association, they also released their application data for last week, showed that purchase applications fell by 0.4% last week. And at the end of the week, the national average for the 30-year fix, well, that had risen up to 6.52%. Refinance applications, well, they fell by about 10% last week, and they're down about 89% year over year. And now let's go on and let's move on and talk about the bond market, specifically what's been going on with a little bit of help across the Atlantic Ocean. So as we've talked about before, global economies all over the globe, they're all very interconnected. And over in the United Kingdom, their equivalent of the 10-year Treasury, they call it the 10-year gilt. Well, that's been on a wild roller coaster ride for the past few days, partly because of a monetary policy announcement or a fiscal policy announcement from the UK government. And that's really caused their 10-year Treasury, the 10-year gilt, the yield to spike over there. And it's actually spilled over, and it's been part of the driving force that we've seen as far as a spike in the 10-year Treasury here in the United States. Part of that is because of that 10-year gilt yield going up as well. Well, today the Bank of England announced that they're going to be doing what's called quantitative easing. They're going to be purchasing the 10-year gilt. And they've done that in order to help stabilize the market and kind of keep things, stabilized is the best word, kind of like a Band-Aid. They put a Band-Aid on it for lack of a better term. And so that's also spilled over here into the United States, and we've seen that effect here in the United States. Mortgage bonds at the time of recording are up 83 basis points. The 10-year yield is down about 22 basis points. The 10-year gilt yield is down about 40 basis points. So we're kind of half everything that the 10-year gilt has been doing over the past few days. And what that means for mortgage rates, though, today, and this is the good news, mortgage rates, well, they've come down today. Yesterday, the national average for a 30-year fixed came in at 7.08%, almost 7.1%. Well, today we're expecting that to come back down to about 6.85%. So that's good news, seeing mortgage rates go in the lower direction. However, like we said, we're optimistic right now, but we're cautious because this thing with the 10-year gilt, we know that that's just a Band-Aid. They're not going to continue that for a long time because that's an inflationary measure. It can cause inflation, and that's what they're trying to stop. And so we know that's going to be temporary, but we also do know, especially here in the United States, like I said, once we get into Q4, we're expecting that year-over-year inflation number to start showing a decline. That's what we're looking for, and that's what we're expecting in quarter four. Now, that's all the news that we have for today. Remember, all of our friends down in South Florida, please stay safe, stay positive, have a great day, and we will see you tomorrow.